All right, good morning, everyone. Happy Monday to all. It is August 24th, 2026. And again, as we start every day, the same way, satisfying the regulators' requirements that we show the risk disclaimers, namely the NFA Compliance Rule 2-290C subparagraph 1. Past performance not necessarily indicative of future results, and trading with futures is speculative in nature and involves substantial risk of loss. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. That's about as much as I will read. All right, let's just quickly start off anyways with just the overall picture. All right, again, the final week of August, summer, lots of people definitely on vacation. You have robot noise on your side. All right, hold on a sec. Okay, how about now, John? Is it any better? It's a little bit clearer. Okay, great. Yeah, so what I do there in order to, so if anybody experiences any kind of like, sound like a robot or like in a barrel or something like that, let me know. What I do is I just turn on and off my headset. My headset is Bluetooth, so of course you all know, experience Bluetooth. Sometimes it kind of fades in and out at times. So, all right, super. Okay, so again, the final week of August, big vacation week. Lots of economic news also on the calendar. You get Jackson Hole anchoring the week on Friday. That is Warsh's, of course, first Jackson Hole. Obviously, lots of people kind of place a fair amount of emphasis on what he's going to essentially say, but for all intents and purposes, um, it's really somewhat of a non-event. But it does, it's going to be an interesting one for Warsh since it's his first one. So again, people are going to be listening very closely, trying to read between the lines. I don't think you have to read between the lines with Warsh. He's saying it like it is. I don't think he's, kind of like you have to decipher, like cuneiform tablets, back in the ancient days. I think, what he says is take him at his word, take him face value. Seems that way anyways. So we'll see how that plays out. But more to our concern, today is a cycle day 3. Yeah, not like Greenspan, exactly. So today is a cycle day 3. Of course, price is currently above the cycle day 1 low, and it should stay that way. So pretty well secure. We have a positive 3-day cycle. But as you can see here, we still have a declining overall environment here. We get the 3-day central pivot zones here, still, you know, uh, configured where rallies or bounces are continuously being sold. Uh, when it gets down to deep levels, buyers step in and try to, work to defend those areas. So again, price did kind of breach kind of that, some of the key upper levels last week, kind of expanded a little bit down further. But again, the market's been trading pretty heavily on both sides, but it seems as though there is a bit of distribution going on. All right, once again, after notching an all-time high. All right, so that's just kind of the bigger picture. Again, just simply understanding the backdrop is important, but decision to decision intraday is where we live. Okay, so let's talk about a little mini lesson here about reclaiming levels. And again, we call that a peekaboo. You can call it a look below and fail reversal, or look above and fail reversal. But the idea of reclaiming or reclamation of any level could be anything that you reference and you deem as a key level reference point. So the idea there is, how do we handle that and kind of incorporate that? So let's just kind of walk through a couple examples and we'll see what we can make, heads or tails out of this, right? So this is somewhat of a classic. Let me just show you actually something here. This is, again, I'm a big Wyckoffean guy, right? Wyckoff logic. So you can see here for the most part, uh, I'll post this up for everybody, all right? But in terms of just phases of price action, it's really what it comes down to, right? So we see plenty of this stuff. And again, don't get, you know, caught up in the terminology because many people, including myself, has, relabeled the same patterns, right? So like a spring or a thrust, right, could be simply a PKB type of thing. But the idea is this, all right? So if we get kind of a basing action, so one of the questions we got, right, was, how do I determine whether it's, how do I play first pullbacks? Right. So again, first pullbacks can be of any type of from a key reference or structured area. So let's just, quickly, you put that to rest. Any level you decide, prior highs, prior lows, value highs, value lows, points of control, essentially anything that you deem important. Okay. So we have kind of this is a pretty good example to what I'm going to show you is, so we have this somewhat called a range, or he calls it accumulation phase, but whatever the case may be, it's somewhat of a range. Then you get this move outside that range, and then you get that pullback. All right. So that's really the first pullback following a breakout of, in this case, a range. Like I said, it can be anything, but we're just going to use this example. All right. So kind of keep that in mind when we move on a little bit. And again, I'll pass this along to everybody later on. All right. So now if we take a look at our intraday chart here, okay, you can clearly see we have some sort of a range. And this was, something recent. All right. So very similar to what Wyckoff is even pointing out. So what happens here? So again, you get a retest of this low, creating that final low pivot, and then you get a move above these highs. All right, so we can all recognize that. So what that does is it pulls up our EMAs. Okay, now remember EMAs, are though they're lagging, they offer some very good opportunities within the context of EMAs. Also, what will happen is your ATRs will shift. Natural, anticipate that that's going to happen. Okay, so now what we want to do is, this is kind of like, we don't want to guess on whether or not it's going to break out like that. Let the market break out. Yes, some people can, play the breakout here, but how do you know it's going to be a breakout? It's easy to see after the fact, but in real time, it's not. All right. So, but what I'm talking about here in terms of reclamation or reclaiming a level. So we get this first pullback. So this whole idea here of this first pullback, so you get this move up and you get this pullback. Now, as you can see here, we have a discount, turbo discount, right? A deep discount, but that never triggered, right? That would have had to kind of hook back straight up for that to trigger. But what did happen here, right? So what would be one of our key reference levels, right? So we're going to go the 89 EMA, all right? And so this here, this configuration right in here is still what we refer to as a discount. Why? Because price is greater than, I'm sorry, scratch that for a second. Price is less than the 89, while the 34 EMA is greater than the 89. So price is less than 89. You can see how it dips below, right? And 34 is above 89, right? So you can see here, Ram likes to call this a pinch, right? This is pinching in here. It hasn't broken. It's just kind of squeezed down. Well, with this squeezing, all right, I view it as there's a lot, like in terms of fluid dynamics, there's a lot of energy being built up. So we're really looking for the resolution of this to move higher. Okay. So we get this little dip below the 89. All right. So we're going to label that our PKB, right? A little look below the 89. Okay. So now what are we looking for? We're looking for price to come back up and reclaim back above the 89. So we want price greater than the 89. Okay. Now, what is this going to show us? It's going to say that the market pulled back deep enough, found some support, sellers got filled, they got absorbed, buyers regaining control. Okay. And what happening here is the market is accepting higher prices now, right? So it absorbed the pullback, and now it's back into the bullish phase, right, of shifting back up. That's when we want to take action. Even though the discount signal was over here, it's still a discount by definition into this area here. So what we're looking for is looking for the market to come back up. We want to take out what I refer to as it usually is going to be a little bit of a mid pivot there. It's going to look like a triangle pattern, but it basically we're taking out any of these highs. Okay, so now in this area right in here, now forget about the ATRs for a moment, all right, because the overall pattern is bullish. So bearish ATR 4 is not of interest. This is the buy zone right here. This is the buy. Why? Because the price has pushed down, it made a pivot, right? It hooked back up. Okay, so basically this area right in here is also referred to as the right side pivot rule. Why? Because it's on the right hand side of the pivot. Doesn't have to be like right close to the pivot. It could be, a bit higher. But what do you have here now? You have price above rising moving averages, right? The moving averages are separating. That becomes the less risky, if you want. There's always some risk, right? But that is the area what we want to look to enter. And in most cases, it's not shown here, but this is going to be a bull stacker. It is not a. It is a discount from this definition, but it's not a discount anymore. Right here on the CCI, but it becomes a bull stacker. That is the buy area. That is where you want to get involved. All right. So look for a push down and a reclaim, and then you can do this exact same thing at any point in time or structure. Just apply the same rules. All right. And you'll see, again, focus in on those type of signals. Okay. And you'll, again, at least go back and research those type of signals and see what happened. See how they played out. See if there's any efficacy to them. All right. So a little mini lesson. And again, first pullbacks, the key to first pullbacks is it has to be from some key reference level, right? In terms of like the ATR 4, yes, every pullback to an ATR 4 is a first pullback of the ATR 4. But really, that's not really what we're looking to do. We're looking to get a first pullback from a key level, structural level. Okay? So, that would be something to kind of work on. Remember how we said last week, choose something and begin to focus on it. Don't try to learn and try to, comprehend everything, but look for something specific, and then focus on it. And the more you focus on it, of course, you're going to begin to retain it further and further. But again, it takes a repetitive action of focusing on a specific topic in order to kind of embed that in you. All right. So hopefully that helps a little bit for a little quick mini lesson on a Monday. And the reason why I chose that is because these things happen constantly. And if we just be patient and wait for the market to provide us the proper structure and wait for it to actually fully form, okay, it's not about a particular price point. It's about the structure of the price. That's what I've taught for many years since the beginning. I don't care about the price itself, 76.72 or 10,072. It doesn't matter to me, right? The price is just simply, how we have to keep score in terms of writing it on our card. But it's really the structure of the price that really is the key component. All right, cycle day 3, we have somewhat of a balancing overnight. Again, as I mentioned, the upper and lower edges of our daily trade strategy have been at least probed. Nothing breaking through the upper or lower edges there, 77.05. And, well, actually, we've come down here. The 60s is our lower edge there, so we're holding above the 60s. And we're holding below the 77.05. So those are the key parameters off the daily trade strategy. All right, that's the skinny on the mini. Let's be patient, just let the market unfold, give us some good opportunity. S 76.95. All right, very, very good. Now on the 750 tick chart, I'm displaying a black background and neutral bars. Just showing you different configurations of what you can do, how you like to perhaps display them on your own screens. Sometimes colored bars seem to uh, get in the way for some of you in terms of, well, it's a red bar, I can't buy it. No, you can buy a red bar. You can also sell a blue bar. But if those color palettes are causing any confusion, then simply make them neutral. Again, it's all part and parcel of how your brain processes the information. Okay. So in this case, I'm just showing some neutral bars. All right. So let's see how this ultimately plays out. So again, as always, what we want to do is, frame out the action, as early as we can. Again, we have our 5-minute opening range. Let's put that up on the board here. All right, so 66.83s is our open range. So you can certainly use that as your initial, parameters, right? So bullish, trying to get above, right? Below. Of course, we have our midpoint at 75s, right? So you can always, that is always a default. Okay, sometimes when we have, you can also use value high, value low, point of control area, right? But basically in the opening high, low, mid, right, always serves as a solid early reference point. Lots of people trade the opening range and the structure of the opening range. Some people use a faster opening range, others use a wider opening range. We use a 5-minute. Right? All right. So again, your thought process would be, if price can push below the opening low and accept those prices, right? So remember the concept of acceptance, okay, versus rejection. That should always be a core concept mulling over in your head against levels. So is prices accepting prices above or below certain levels? Is it pushing below and then rejecting it back higher, or rejecting it back lower? Okay. And again, not one single bar is going to give us the answer. I know what we like to key off of. Ooh, look at that candlestick. That's the one. But in fact, it's a combination of, you know, a number of different things, price, volume, time. Remember, these bigger institutions, they need to, if they're going to move prices above or below levels and keep them there, again, they have to do it with a fair amount of energy, right? So energy is volume and persistence. It's easy to push price above or below a level. It really is, particularly in the futures, or with these institutional players, right? It's a different story to move it and then keep it there. All right. So push down to 66s. So really, the overall kind of structure from the long angle would be to get above the midpoint, right? Stay above the midpoint, and then eventually work its way above the high, stay above the high, right? So kind of that stair step thing. If it just pops above the midpoint and kind of rejects back down again, so kind of make that assessment. Right now, currently anyways, most of volume is taking place in the lower half of open. And just making observations all right now. Right. So what's the current lean? Okay. All right. So the short's the current lean. Remember, when I'm highlighting levels, that's all that they are. They're levels. Okay. And I'm not trying to infer, all I'm trying to infer is if price can stay above a level or if it can stay below a level. Okay, so again, we use these levels as references. I'm not implying that it's going to one way or the other. What we want to do from that standpoint is then ask the next question, right? Constantly actually ask the question, what is the current lean? Okay, so don't assume that, oh, if I mention, well, if prices hold above the low, I'm not inferring that they're going to. I'm just saying if they do. But what overrides that is what? It's the lean. Hey, the lean is short. Okay, fine. I'm gonna, you know, be in alignment with the short, regardless of whatever the low is of the opening. You follow me? All right. So we're just using those as references, but the core of it is I want to stay in alignment, long, short, and that's really it. Okay. Maybe you don't even give two hoots about a level, right? In the overall discussion, right? You may say to me, David, great, I see the levels. I don't really give a two iotas, right? I'm just staying short. I'm just staying aligned. Okay, so and I would to answer to you, I said perfect. That's great. You don't have to, reference. It's just a reference, right? All right. So the short side, of course, we're leaning hard into. All right, we get an A4 short also that's playing out. I don't have. Okay. Huh, interesting. All right, down to 55. So within our 60 target zone, plus or minus 5. Yeah, D levels here at 54. So if you are playing a D level, if you're playing the D level strat, right, you're involved there. Right. Next test will be on the short side against the A10. See if the A10 gives us a bounce and a stall. All right, scaled out of the A4. Okay, on the short side there that played out. Again, if you're in the D-level money box, all right, you are scaling out of that one. Yeah, I know. We got ticked again, rat bastards. Yeah, the DLM money box shoots and scores there, right? So a little dip down into that area and then bounce back up. All right. They know we're at the A10 level and they ticked us. Literally ticked us. All right, thank you, Dan. All right, so the bulls have to do the job once again of absorbing, all right, the selling. They've been on the defensive all week. All right, so we got a probe below the current structure down to the D level. We got our bounce from the D level. All right, so now we still have the opening range low level there, 65s, call it. All right, as reference, price is now currently above that. Now, what we want to see is a continued hold above that. All right, again, to strengthen the bullish case. All right, and if you're still long in terms of, yeah, if you're still long in terms of off the D level money box, all you're doing there is managing it. Okay, again, we got an A4 that's played out. Oh, I see why. Aha. I see why. I knew that was going to happen too. That was going to happen. That was going to happen. Yeah. All right, 10 o'clock. What do we got? Consumer confidence, new home sales. All right, just kind of hanging out in the middle right here. Again, still levels to be considering and clearing and converting the 75s. Again, when strengthen the bullish case. Rotating back below those 62 area would strengthen the bearish case. Right now, we'll maintain the bullish lean for now. You're really looking for a discounted situation here, right? You want the CCI to come back down at the lower edge, hold, right, shift back up, right? They call this a hook. Why do you think they call this a hook? Because it looks like a fishing hook. I was watching a program last evening on this fisherman guy, and he was going after Goliath groupers, and he was using one hell of a hook. All right, so notice you're in the middle here, right? Snaps and traps, all right, type of play. All right, 8-10 working out. All right, it needs to hold above like the 60, 62 area here again for the bullish, case, right? Bearish case again, right? Right now the 810 did pay first. Those prices at the break-even line, all right? Theoretical average break-even line. So that position is protected. And if you haven't done any trades today, no worries. Take your time. Nobody's pushing you. Did we just lose one of our charts? Hold on a second. Oh no. Okay, we're good. Let's see what happened. Like to get a nice trend developing here somewhere. Nice, give us a nice trend day. Potential for the high is in place, certainly, right now. Don't know if it's going to be the final high. We do have a positive 3-day cycle, so at this point becomes a wild card day. Anything goes. All right, two scales on the A10, playing out nicely. Not only in the Globex ors, but also in the RTH. Just meaning that the primary, goal, all right, is to have price above the cycle day one low. Today on cycle day three, of course, if it's a stronger cycle, we hit those targets as well. But once the primary goal is satisfied, my term of a wild card day, that's not a tailored term. We did have a good positive play, on the options on that deep cycle day one low the other day. But again, as you all know, with options, it's you could be right on the direction and still not make any money in the option, right? It's such a balancing act of timing and then magnitude. Timing could be good if the magnitude is not there, then time dwindles away, right? Decay. Yeah. It's again, that's the nature of options, right? All right. So push up, down, push up, kind of like drifting now. Right. NQ opening range played out nicely as well. Same type of pattern if you're playing NQ. I don't play NQ and ES simultaneously. Just choose whichever one you like best. Certainly, if you want a little bit more, action, if you're Action Jackson, you're probably gonna lean towards the NQ. I look at the DOM of the NQ. I can't even follow it. I can't even watch the DOM of the NQ. I get vertigo. All right, we're holding our 60s so far, right? I think I got that number right. Little dip below that early, but we're still kind of holding that 60 area, so that's good so far. I try to get the edges best I can. I wrote the daily trade strategy yesterday at 4 p.m. in the afternoon. I was not going to be able to do it later in the evening, so I did it late in the afternoon because I was going to be out of touch off my computer. Some people wait till the morning, to write their piece. Um, Nothing wrong with that. They want to get, kind of more information about what happened in the overnight. I'm more interested in what happened during the day session. So I can really write the DTS briefing. Uh, I mean, I could literally write it at the end of the day for the next day. I don't do that yet, but because I use day session parameters, and so whatever happens in the upcoming Globex evening doesn't really affect what I write and how I outline the next day. We did that the other day for those of you who are around, right? We did the exercise, I think it was Thursday afternoon. We were showing you everybody here how kind of I go about looking at levels and such, and the levels that I outlined that particular afternoon, I actually did for the next day, and it actually played out well. So it was I I'm I don't know, was that one of the days that the recording didn't work? I fixed the recording on the stream. I thought I might have fixed it for that day, Thursday. Check it out. See if it works. Oh, it didn't record. Oh, it was the afternoon bonus. That's right. That's right. Had that off. Yeah, we'll do it again. Oh, okay, so Wednesday, the day that my recording didn't work, yeah, the pit was still being recorded last Wednesday. That's right. It was just a setting issue. I guess there was an update on OBS, and I don't know. I guess the update kicked off the volume setting, audio setting, and I didn't realize it. Yeah, the Pitbull YouTube channel. Yumi had a good piece over the weekend. I don't know if you guys still following Yumi's channel. I responded to her in one of the replies. She liked it back. This was her reply to me. That was her reply to me on that post. This is what I wrote. You guys see it? I don't know if you guys see it. Right. Everybody knows the story of the bamboo, the parable. You know when I first learned that about the parable of the bamboo? A friend of mine in trading, all right, Don, he in his office, he lives up in Maine now, but he lived on Cape Cod, and my wife's in Cape Cod, so we go to Cape Cod a lot. Anyways, so uh, so when he was living in Cape Cod, I said, "Hey, I'm coming down this weekend. Any chance of grabbing a bite or something?" He said, "Yeah, sure." So, anyways, so I got into his office. He has his office trading room in his own house, and so we were just jibber jabbering and all that other stuff. This was many years back, and I said, "Is that a bamboo tree?" Because bamboo trees can grow like monster size. He says, "Yeah." He says, I have to keep it trimmed though, otherwise it'll grow through the roof." And I said, "What's the story with that? I've never seen, only panda bears eating bamboo, you know." So he says, "Oh, you don't know the story about the bamboo?" I said, "Never heard of it before. Why? Is there a story?" So then he told me about the parable of the bamboo. And so for him, his trading, that is kind of like the, you know, inspiration for his patience during trading. And so I never forgot that. That was, you know, he says, "You'll come in here every day and you'll be spinning your wheels, spinning your wheels, spinning your wheels. And you're doing, you want to come in here and make progress every single day. And, you anticipate, you want to make money every day and kind of you anticipate you're going to make money every day, but that's not going to be the case. You're not going to have successful trades, and so forth all the time. And, you're going to be, many times you're going to be struggling and you're going to feel like, you're just spinning your wheels, not making any progress. But if you're faithful to your process and of course, you've done your research naturally, right, on your strategies, sometimes, you just, you gotta grin and bear it type of thing, right? So it's kind of the parable of the bamboo about the farmer. And I think it's a great analogy. So when Yumi posted her little Farmer Joe picture there, it's like, oh, that reminds me of the bamboo. So I sent that reply off to her. And I think it's a good, I think it's a good analogy. You know, I think it's a good connective story for what we do. You got to be patient. You know, you just got to be, you know, persistency, you know, and not get frustrated. And the idea of FOMO, right? Fear of missing out. You know, if you really are true to the process and you know the process works, and so what you have to do is just, you know, continually just executing the process. I'm not saying that it's easy by any stretch, but again, that's what we have to do. Well, it's still holding the 60s. Again, and again, price will really need to get back above the prior close there, or 75's opening range mid, and then up through the opening. So bears continue to have a slight edge. Again, we're short of 810 and 8, both 84. Yeah, I think I can post it right now. 1 second. All right, 60 still holding. That's looking good. Again, just kind of just continue in intermittent observation mode here. Yep. Really not much has changed. Still 75s need to clear, convert, and then for a push for the opening high. All right, so the initial balance now here is in place. First hourly high low. All right, so we got stopped out on the trailer on the A10, which is fine. Remember that that should not turn into a loser. And we got shifted out of the A4. All right, so I think at this point, again, the A7, you guys are always, some of you are trading A7 or seeing that. Okay, so that A7 also has shown efficacy here recently. So A10 holding. All right, some of you have that on your radars. Again, is it the A10? I mean, excuse me, the A7 that held? You know, is it because of the A7 that held? No, it's just that there's an A7 there that did hold. You know, that could give you some continued confidence if you're looking, you know, to trade against that, you know, lower value area, right? 60s, which was also one of our targets. Remember, in terms of our targets, right? Their targets first, their potential reversal points second. That has always been the case. So the 95s is line in sand today. So a push down to the 60s, naturally that is a target. But also they can become, in this case today, a support, right, or a reversal point. I don't like to, as you all know, I don't like to outline a level as, you know, before it has proven itself as support or resistance. It's not how I was taught when I was a market maker, and that's not what I teach as, you know, as a trader here, right? As an educator. Some people like to say, you know, okay, that's support. Well, how do you know it's going to be support? What you can say is I'm anticipating a buy response or anticipating a sell response. That makes more probabilistic sense. But that's why people get, oh, that had to be support. Why did it have to be support? Who says? You know, the market's the final authority. But I do anticipate buyers stepping in there and sellers maybe, getting absorbed. So that's certainly and again, that the way of thinking that way, again, it's all about thinking, if this happens, then that. If this happens, right? It's kind of a probabilistic way of thinking, right? Not, again, if you start labeling things like that's support, or that's going to be support, you have that's now you're into predictions, right? And what you might as well go see the tarot card reader. All right. So that said, reclaiming back above 65s now. VWAP at the moment. Again, the next level here needs to convert, right, on the 75s. This is a good one. This is a good one by Isabel. Difficult market doesn't exist. It either fits your rules or it doesn't. Too many monitors, too many indicators, too many hours staring at charts. No. If this, then that. No rules tested over hundreds of trades. The chart doesn't care about you. You make it difficult. That's a good one. Notice what she's saying in that, right? She's saying no, if this then that. In other words, you're not using that protocol, that decision protocol. That's what she's saying. No, if this then that. You're not using that type of structure, decision process. That's a good one. All right. All right. I think we're shifting to the long side bias here. Lean. I think we're pretty safe in doing that at the moment. So we get some sort of a dip. Again, we're right at that opening range midpoint, 75s. Again, that's our next hurdle. All right, again, still gotta clear that 75. Not really seeing a whole lot of kind of mojo developing here. All that we've been able to do here, the price just kind of work its way back up to that opening range mid, but not really seeing any, you know, excitability to push it higher. At least not yet. But again, the structure is there now. It's starting to, you can see that kind of shifting back up and again holding here against in the 70s, 68, 70s. So a little tag of the 75 is back down. Now they need to get some follow through. But it does not seem to be any urgency. So doesn't have to be. So far, again, if you nibbled into the 69, 70s, you're in good shape anyways. Okay. And you got VWAP right here as well. So this is your kind of the balance point. Yep. Here's a provocative question. If you only had one day left to live, how would you spend it? Actually, Nickelback wrote a song about that. Eating ice cream. There you go. What they say, if the sun exploded, what do you have, like, is it 6 minutes or 8 minutes? Something like that. If it went supernova. I think the idea of all that is if today was your last day, you knew, how would you live it? Well, you got to kind of live every day like it was your last, right? So John B would be eating ice cream every day. So when John B doesn't eat ice cream today, he doesn't think it's his last day. Funny. Yeah, you can see that there's really not a whole lot of urgency, to move this higher yet. I mean, the configuration is okay, right? But we're really still somewhat in that middle of that range, right at VWAP, not able so far to clear the opening range midpoint at 76.75. All right, so you don't really have a whole lot of urgency to move higher. And certainly that could change, right? But at the moment, yeah, you get NVIDIA earnings on Wednesday after the close. I don't think the market's necessarily waiting for that, but clearly that's uh, a benchmark for the market. All right, well, long of A4 here, just not getting much urgency here to push. We'll see. Somebody needs to step in and get a bit more aggressive. All right, somebody's getting excited. All right, first scale out on the A4. Somebody's starting to get excited. Yeah, I posted a little blip on the NVIDIA earlier. Here's the repost of that. All right. So then just kind of slipping back a little bit. You can see, again, this is kind of a good example where, you get the move up, you get to pull back into, the fair value zone. We know that the 75s here is key, right, based on opening range over here. So again, this just kind of becomes it as an example of, we got the move up, but then you didn't have the urgency. You can see that in the urgency. You can actually see that in the urgency of if you're looking at order flow. All right, there just really wasn't a whole lot of urgency, to go lift to lift the market. Look at the order flow over here. All right, you had a little burst here, then it reversed back down, then you had another move up, but the volume here, and again, everything's relative, but the volume here didn't really, look at the profile of that 5 minute bar. Look at the profile of this 5 minute bar. Do you see the profiles here? Now, again, I don't really necessarily care about the numbers, all right, but how the profile is shaped. So you can see here on that 5 minute, all the volume was down below, okay? You can see on this doji, 5 minute doji bar here, right? Again, all majority of the volume was on the bottom. Does everybody see that where I'm pointing? So these are just 10 minutes worth of time. And so I'm looking at this, I'm saying there's really no urgency, right, to be lifting the offerings. So that's what I'm saying. When I'm looking at this and I'm trying to decide, do I want to, get involved here? All right. I'm looking at, well, what's the attempts on the side of the buyers that they, again, at that key level 75s, what's their actions? So that's when I look at order flow, and what I'm looking for is I'm looking for urgency. I'm looking for they're persistently taking those offerings. Somebody took offerings, right? But then it just stopped and faded. There's obviously buyers and sellers everywhere, but what I'm looking for is a level of persistency, urgency, kind of like, hey, Pac-Man, the idea of Pac-Man, right? I want to see them coming back, coming back, coming back, coming back, and kind of eating through and saying, okay, we're going to see what's there, and then we're going to look to rip it. I look at order flow and I'm saying, I don't see that. Does anybody? I don't really see that. So, when it goes into the decision making, this is a little bit more, um, experience based, I guess, right? What I'm looking for. And again, then it just kind of, you can see here again, look at the upper side of the profile of this period, right? And then further to the downside. Everybody see that? Anybody? Thumbs up? So just so I know. Okay, thanks, Oris. All right. So these are kind of some of the clues that, when I'm looking at, okay, see the move up, pull it back here. Question is, we did get a discount here into the fair value zone. Okay. So part of my decision is not just looking at the right chart over here on the right and saying, okay, I got the configuration, but is there the order flow that's gonna, push this? And that's what I'm saying is I don't see the urgency. So if there's no urgency on the part of, remember, we're trying to kind of tag along, right? What the market's doing. So if there's no urgency in those that can move the market, and that's what I'm looking for, those that can move the market. If there's no urgency there, there's no reason for me to be urgent. Okay. Yeah, over here as well, right? You can see that. But even in this area right in here, right, where it would be, where we're looking at the order flow there, it's kind of, scrappy, right? Some a little bit above, some a little bit below. Okay, all within, and again, we kind of look at it this way, but kind of block it off there for a moment, right? And you can also see here, in the CCI, it's not really persistent. It's down, kind of bounce up, down, kind of bounce up, right? So, these are some of the clues. I really want to see persistent, volume, because I'm looking to tag along with my long on from those that can, be the market movers. Everybody follow kind of the logic there, right? So this is just kind of uh, an overview of kind of the OODA loop, right? So I got the observation, orientation. So I'm really thinking about the decision action cycle, right? So we have the observation, orientation in place, right? Kind of long leaning. But the decision action is, what am I using there in order to take that, take a trade or not take a trade? So I want to see some volume. Now, again, I do tend to look at order flow, but you don't have to. Like I said, I don't really care about the numbers. I really am more interested in the profile shapes, right? That would be what I look at primarily. And I'm just seeing that there's very little volume to the upside pushes and not any sustaining of those bids. Okay, so and frankly, with CCI, not really much in the way of momentum building. So that's kind of how what I would, to my comment about there does not appear to be any urgency. Yeah, for me, it's a profile shape. You know, um, Again, I'm not going to get into the whether or not this any of these size volumes. They're all 3-digit volumes anyway. So that's you know when we start seeing a large like 4-digit volumes back and forth, then heavier contract size and so forth. But generally, kind of three, and again, there is some relevance to looking at the size of the numbers, but that's not a primary concern. I guess that's just more secondary. But again, if you're going to be looking for, a breakout of a level, you want to see that persistency, that I call it Pac-Man, right? You remember the old Pac-Man, type of thing, right? Right, chop, 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 chop. I want to see Pac-Man chipping away, eating away at whatever potential supply is there. Right. So it's all about, kind of how much volume and then the persistency of the volume, persistency of the action of either the buyers and sellers. Order flow reading is hard to teach. There are some people out there that do, but I don't, so like I could describe as I'm doing here what I like to see in order flow, but it's not necessarily the be all end all of what, how I would make a decision. So it's just one kind of, datum that I'm looking at. But I can get that information, elsewhere that has volume ratio. I mean, you really want to see, again, you want to see above the zero line and you want to see persistent, buying, not this ratty back and forth type stuff. So the total delta, I do it is tracked here. I don't know if I really pay that much attention to it. Again, maybe secondary, tertiary type of, uh, you know, somewhat in the back of my head, but it's not really what I'm looking for. You know, again, I want to be able to see the Pac-Man effect. I want to see that, they're persistently working to take out whatever supply may be there. And it's not always going to be the case where a price breaks out and it's always, aggressive Pac-Man. It could break out, on relatively low volume too. But in either case, if it does break out on relatively low volume, I'm more interested in, well, is that really going to persist? So if we break out on low volume, it's likely to come back down. If there's commitment, if it does come back down, the expectation is there's going to be persistent commitment. Yeah, effort versus result. All right, a Wyckoff, you know, uh, concept. Well, in Sierra chart, I can track the delta on every. This is the delta on every bar, and then I have cumulative deltas down here, right? So the cumulative delta right now in the total bar. I'm sorry, that's not cumulative. That's on the bar, right? So again, I don't really pay a whole lot of attention to that. Some people do. I'm more interested in the Pac-Man effect first, because that's going to be the Pac-Man effect for me. That's what I refer to it as, the Pac-Man effect. That to me, that's telling me that institutional participation, they're the ones, again, they're the ones that can move the market. Yeah, that's what I call it, the Pac-Man effect. I should probably put that in the glossary. Because my handful of contracts is not going to move the market in any way. Then of course you can, then on the flip side, see, this is where at some point you want to be you want to become somewhat ambidextrous. We were talking about that lefty righty hands last week. You want to somewhat try to become ambidextrous, meaning that, and this is where the if then else kind of comes into effect. So you see this action here and you say, well, okay, so I'm looking for the if, right, for the plus side. So if it holds and then, volume comes in, et cetera, right? So that's part of like the decision action cycle. If this, then that. But also on the flip side, right? Well, what if the if is more of a negative if? If it doesn't go up, right? Is there something to do there? Kind of like, you can kind of create that line in the sand, temporarily line in the sand for yourself right there and say, well, if if the price is not pushing up with any vigor, maybe they're actually planning to move it lower. So then you'd say, well, if I see more evidence of that, maybe that becomes a short. Not saying it should, just saying, well, maybe that becomes becomes a short. And you put an entry, on a break here with a stop loss above here. Because why? Why would you put a stop about this? Because you see that the buyer's not having any success pushing it higher. So these high points here, right, is where the last buyer bought. See how the thought process, remember, my goal going forward is to help you work on a thought process. And again, we're going to go back to this if then else so many times. So that's the idea. Well, if they can't push it higher, if they're not really having any success sustaining a bid, then to me, what I also am thinking is, well, if the buyers here that attempted to push it higher and they can't, they're probably going to be trapped buyers. What happens to trapped buyers? Right? When the market makers realize, hey, they're not making any progress, there's no real strong, persistent buying, they're going to hit it. And when they hit it, they're going to force the trapped buyers, obviously, to bail. Exactly. They're going to have to bail out. So again, the idea is to think about this, not just look at the chart and say, okay, we got the EMAs, we get an A4 bullish configuration. Okay, it should be going up. This just shows us a configuration of the price action. What we want to get to is, okay, so the buyers that pushed it up, we see that would happen. So again, the way I've referred to it is the onus, O-N-U-S, the onus is on the buyers. They pushed it up. Is that all you got? Or do you want to push it up some more? Yeah, the buyers that were, yeah, they got absorbed by the sellers. Absorption obviously works two ways, right? Yeah, absolutely. So if they try to push these up, so who is the stronger party? The passive sellers. Yeah, in this case, yeah, passive sellers. That's what I'm looking for. I'm looking for not only an aggressiveness, because like you can see the buyers pushed it up here in this move off of these lows. So yes, they were the aggressor, and there was just probably an imbalance of sellers. But then they got to the point where they got those buyers got filled by passive sellers. Okay, and then rotate back down a little bit, and so again they also see on the pullback somebody paid these prices right up here. So somebody looking to buy on a bit lower would be saying, well, at least I bought them at a fairer value, fairer price. And they would be correct, as we would do. We would be looking for. But I'm also looking for, well, who pushed it higher? What side? The buyers. Okay, the buyers then show me, could I buy them in the fair value zone here and be relatively safe doing so? Yes. Okay. But if I'm here in this area somewhere and I'm seeing this action here, other buyers trying to push it higher, and I'm not seeing that they're having any success at it, and I happen to be in at a lower price point, a better price point, and I'm seeing that they're not having any real success pushing it higher, I'm already positioned. Good, guys, push it higher for me. Thank you very much. But if they're not doing the job, again, once you're in the position, now you'd be thinking, I need to continue to see strength in order to continue to hold that position. And if that's not happening, then my thought process becomes defensive, right? I may put my stop right up to even break even for that matter, and say, okay, if these guys can't push it higher, I'm not I'm not hanging around. Again, this is all kind of a thought process unfolding, and that's kind of the read of the market, right? So once you're in a position, once you're committed into a position, one, you want to make sure, is my commitment into a position the proper one? Number one, am I aligning with the underlying, action? And should be the case. Once you've committed into a trade, right, you certainly have your stop loss in place, but now you need to see the other guys that have more power than we do, right? Keep pushing it. You did your job. All right, you saw it, you read it, got a little bit of a pullback. Okay, I'm in. Now, those guys, the ones that are stronger, they need to push it. All right. So we need to be actively thinking about what's going on as part of the read.